Hi, everyone. Again, thank you and welcome for joining us today for our webinar. My name is Meg Beyer. I'm the Director of Healthcare Innovation at the McSilver Institute, and I am here representing our MCTAC project, our Managed Care Technical Assistance Project. We're joined today by two wonderful presenters who will introduce themselves momentarily. And I'm also joined by my colleague, Nadej, who is running things on the back end. So if you have questions, if you're looking for resources, Nadej is probably the person answering your questions in our chat box or through our mctac.info Zendesk email address. So I want to thank Nadej for all of her work today as well. So with that, I'm going to get things kicked off. I want to welcome you all again to today's workshop. This is the first of two workshops that we're offering this month. So we're excited to be launching today. Today's agenda really covers some really critical information that our presenter Roberta will review shortly. We are then going to have some breakout rooms just for about 15 minutes to kind of dive in on some questions and some thoughts and conversation. And then we'll regroup and have a feedback session where we talk about what you discussed, some of the questions that came up, and even potentially use the opportunity to problem solve some issues that might have come up during the breakout sessions. Then we'll get to the end of our presentation today, and we'll summarize things, have closing remarks, and maybe give you a tiny preview of what to expect on our second workshop that's coming in a few weeks later this month. Next slide, please. So as you probably know, because you may have heard the sound already, this presentation is being recorded and will be posted to the MCTAC website with the slides in the coming days. It takes us a few days to have the recording download and then distribute it to everyone. But you will be receiving an email with the slides and the recording so that you can review things, share it with your colleagues, or just follow up. We're also asking today, if you have questions, to please use the chat box or raise your hand using the reactions button on the Zoom toolbox at the bottom or side of your screen, depending on how your Zoom is enabled. The other thing I would like to remind folks today is that this presentation has been prepared for information purposes and general guidance only, and it does not constitute professional advice. The information contained in this workshop should not be acted upon without first obtaining specific professional advice based on your organization's needs. The other thing I just want to add in here is that as you've probably joined for a few, maybe this is your first MCTAC webinar, and for those who this is the first time you're joining us, welcome. But for those of you who this is not your first time joining us, you've probably heard me say the following a few times, but we really look for your engagement and participation in making this workshop happen. And so I do want to encourage you to chat in your questions. My colleague Nadej and I are going to be monitoring the chat box the entire webinar today, and to also raise your hand. But I also do want to say that after the breakout rooms, you will be able to unmute yourselves so that we can have conversation. So I want to encourage you after our breakout rooms to unmute yourselves and speak up and share kind of the feedback from your breakout room session. So with that, I'm going to ask Roberta to go to the next slide. Okay, and as I previewed just briefly, we have two wonderful presenters today joining us. We have Fern Zagor and Roberta Katz, who we have worked with at MCTAC over the years, and we're really thrilled to be able to offer this workshop with them to you all today. I'm going to ask Fern, would you like to introduce yourself as we get things kicked off?
Thanks so much, Megan. I'm looking at this picture, and I guess I have to update it. It doesn't reflect all my years of experience over time. Somehow I lost the Zoom picture.
Oh, well,
it just disappeared. Let me see if I'll speak and then I'll turn this over to Roberta. Okay, I was able to get it back again. I'm so sorry. So I'm Fern Zagor, as you see. I've lost it again. Very weird. Some of you know me. I've been in the field for close to 50 years. My last gig was the CEO of the Staten Island Mental Health Society, which is the primary provider of mental health, behavioral health, and developmental disability services to children and families on Staten Island. And I've done a lot of work in the community. I've worked at FQHCs, I've worked in local jails, and I'm now leveraging my experience and have my own consulting firm. What we will be discussing today is really focusing on breaking silos between the fiscal department and leadership and program people with their feet on the ground and doing the work. How do we build that communication? This is the second series of workshops along these lines. Roberta and I presented, it was actually 4 webinars, 3 webinars and one open house this past winter, spring. And I know that those were recorded and you can find them at the MCTEC website. Today is taking a deeper dive. We're going to be looking at the fiscal department, its operations, and what's important from the fiscal department's perspective in terms of the information it needs and the communication that's there. In 2 weeks, we'll be having another workshop that will be looking at breaking the silos and increasing communication from the leadership's perspective. And in that deeper dive, we'll be looking at developing a business plan that makes sense to everybody, to all the stakeholders that are involved in the delivery of services to our target populations. And with that, I'd like to turn this over to my colleague, Roberta Katz.
Welcome to today's workshop, and thank you for joining. We'd also like to thank the NYU McSilver Institute MCTAC team for allowing us to present this workshop series to you. I'm Roberta Katz. I'm the founder of Roberta Katz Consulting. I work with nonprofit organizations to strengthen the operations of their finance department. The services that I provide in my consulting business are based on my 15 years of experience working in senior financial management positions at several nonprofit organizations, overseeing the day-to-day operations of their finance departments and implementing processes and systems to strengthen the infrastructure of their finance departments. So in the previous fiscal operations webinar series that we presented, we discussed the importance of a strong finance department and 2 key responsibilities of a finance department. The first is to implement processes and systems to safeguard the assets of the organization. And by fulfilling this responsibility, financial resources will be available to run the organization's programs, deliver services, and successfully carry out its mission. The second key responsibility that we discussed is to generate accurate and timely financial reports and financial data that's used by senior management, the board of directors, financial institutions, funders, and donors. And by fulfilling this responsibility, there'll be reliable financial data and financial reports available upon which to base important decisions about the operation of the organization and to develop strategic plans. We also discussed that the finance department cannot and should not function in a vacuum. In order for the finance department to fulfill its responsibilities, they must collaborate with leadership and staff throughout the organization. And one of the ways that the finance department achieves effective financial management is to establish and enforce accounting policies and procedures, which we will be taking an in-depth look at in today's workshop. And these policies and procedures apply not only to the finance department, but to leadership and staff throughout the organization. In today's workshop, we'll discuss what are policies and procedures, why the finance department implements policies and procedures, why conflicts between the finance department and non-finance staff arise in implementing the policies and procedures, and how those conflicts can be resolved cooperatively. We'll discuss some implications of policies and procedures for leadership, some tips for enforcing and monitoring policies and procedures, and finally, key elements in the creation of an accounting policies and procedures manual. So what are policies and procedures? Policies are rules to be used as a basis for making decisions and determining courses of action. For example, The organization will issue credit cards to officers and program directors only. Those credit cards are issued to them based on their business needs and upon approval by their supervisors. Procedures are the courses of action that must be followed to implement a policy consistently. So an example of procedures for this sample policy we just discussed is employees are issued credit cards only when requested by their supervisor in writing, directed to the credit card administrator. The request should include the business purpose for the credit card and its credit limit. So the procedures tell you the steps to be followed to ensure that the policy is consistently carried out. So why does the finance department implement policies and procedures? Policies and procedures are established to protect the assets of the organization, such as its cash, investments, physical property, so that the organization can run its programs and successfully carry out its mission. For example, an organization must have policies and procedures in place to ensure that all checks and cash received are properly accounted for, properly recorded, and promptly deposited. Policies and procedures are also established to implement internal controls, which are checks and balances that mitigate the risk of unauthorized or even fraudulent activity. For example, all organizational spending requires supervisory review and approval. And supervisory review and approval is a key internal control that should be incorporated in policies and procedures. Policies and procedures are also established to ensure compliance with regulatory and accounting requirements. So for those of you whose organizations receive government funds, organizations must comply with regulations from government funders. And from those of you who receive these funds, you know that there are many regulations and there must be policies and procedures in place to ensure that these regulations are complied with. Also, to comply with the Internal Revenue Service's requirement to file a Form 990, which is the organization's annual information return. So what are your policies and procedures regarding who's responsible for providing the information for the 990, who's responsible for preparing the 990, and who reviews the 990 before it is filed with the Internal Revenue Service? Policies and procedures are also established to support the accurate recording of transactions in the financial records in order to generate timely and accurate financial data and financial reports that's used by leadership and the board of directors to make important decisions about the operation of the organization. And we discussed that this is one of the key responsibilities of the finance department, and one of the ways that they fulfill this responsibility is establishing and enforcing accounting policies and procedures. Collaboration. So this is a term that we emphasized in our previous webinar series, and we will emphasize in this workshop series as well. Collaboration between the finance department, leadership, and program staff is essential for effective implementation and adherence to the policies and procedures. So some areas where collaboration is needed is organizational spending. Most, if not all, programs and departments throughout the organization spend the organization's funds, and they are responsible for adhering to policies and procedures regarding having supervisory review and approval over the organizational spending, submitting proper supporting documentation, and account coding for the expenses. Collaboration is also needed in revenue cycle billing. Program staff is responsible for complete documentation and approval of services provided, for example, on progress notes, and timely submitting these services to the finance department for billing. So there must be policies and procedures in place regarding your billing process, and this requires collaboration between program staff and finance staff. Another area where collaboration is needed is in preparing the organization's budget. The finance department should not prepare the budget by themselves. Key program staff should have input in submitting proposed budgets for their programs to be incorporated in the organization's budget. And there must be policies and procedures regarding who's responsible for submitting these proposed budgets, when do they need to be submitted to the finance department for review and approval, and when does this budget need to be submitted to your board of directors for final approval. So why can conflicts arise between the finance department and non-finance staff in implementing policies and procedures? Non-finance department staff may not have received proper communication regarding the policy, for example, by email or in staff meetings. So staff might not even know that there are policies and procedures in place. Or they might have received communication, but no explanation as to why the policy was established. And without proper explanation of the policies and procedures, it makes it that much more difficult to adhere to them. Or they might have received communication and explanation, but no guidance as to how to comply with the policy while still fulfilling the demands of their daily responsibilities. So for example, the finance department establishes the 5th business day after month end as the deadline for submitting credit card expenses. However, a case manager may have difficulty meeting the deadline because they are dealing with a client in crisis. And a little bit later in the presentation, I'll give some suggestions for addressing this type of a conflict. So now we're going to look at a sample cash disbursements policy. On a subsequent slide, we'll look at the cash disbursements procedures for this policy. This policy states all invoices, check requisitions, employee expense reimbursement requests, and credit card charges received by the accounts payable department must have proper supporting documentation, supervisory approval, and account coding. Submissions for the month must be received by the due date established by the finance department. And I've indicated here in bold the important components of the policy. And on the next slides, we'll discuss why it is important that these components be included in the policy. The first component is supporting documentation. So some examples of supporting documentation are a vendor receipt if you purchase goods, if you're going on an overnight business conference, a copy of the invoice for the hotel, a copy of the agenda of what will be discussed in the conference. Supporting documentation is required to verify the amount of the expense and that it has a valid business purpose in accordance with the mission of the organization. In addition, for those of you whose organizations receive government funding, when these funders do an audit of what you've spent the funds on that they've provided to you, they'll request supporting documentation. And the government funders that I have worked with, and I think this applies to most, if not all government funders, if you do not have proper supporting documentation, they will request that you return the funds to them. Also, if your organization has an annual financial audit, the independent auditors will request supporting documentation as part of their financial audit procedures. So has the finance department returned your expenses for lack of supporting documentation? So perhaps you didn't provide any supporting documentation, or it's not legible, or it doesn't support the expense that was incurred. And it can be difficult to accumulate all supporting documentation, especially if you incur a lot of expenses on behalf of your organization. So I have a couple of suggestions here to comply with this policy requirement. Is to use your cell phone to take pictures of the receipts when you incur the expenses. If your organization uses an automated expense management system, there'll usually be an app where you can upload these receipts to an expense report for submission to your finance department. If your organization uses a more manual system, you can use your cell phone to take a picture of the receipt, file it in a secure online share drive for submission to the finance department on an expense report. If you still use paper receipts, you can simply set up a file folder and put the receipts in that folder when you incur the expenses, and then set up some sort of a schedule for yourself, perhaps at the end of every day or at the end of every week, where you review your receipts, you scan them, and you file them in your online secure share drive for submission to your finance department. And if, and this should really be on an exception basis only, you never got a receipt or you've lost the receipt, you should have the ability to complete what's called a missing receipt affidavit. And I have a sample on the next slide if a receipt cannot be located. If your organization uses an automated expense management system, this affidavit should be embedded in the software. If not, your finance department can simply provide this affidavit on a Word document, which is how this sample affidavit was prepared. This is a sample of a missing receipt affidavit for an agency credit card expense. You list here the date of the expense, the name of the vendor, the amount of the expense, the business reason for the expense, and you acknowledge that the credit card charge is a valid business expense that you have incurred on behalf of your organization. And you further certify that the receipt applicable to this expense is no longer available. You sign the affidavit, print your name, and date it for submission in lieu of supporting documentation. But again, this should only be used on an exception basis. The next component that I had on the policy in bold was supervisory approval. Supervisory approval by a staff member who has direct knowledge of the expenditures, for example, goods purchased, services performed, and employee expenses, ensures proper internal controls, checks and balances over the funds spent. And I want to emphasize here that the approval should be by somebody who has direct knowledge of your job responsibilities, your job functions, what type of activities you're involved with for your program participants. Because, for example, if you have a meeting for your program participants and during the meeting you provide food, which you've purchased with your own funds, and you're requesting that the organization reimburse you for the amount you spent, and you submit this request for approval to somebody who has really no knowledge of what your job function is, your responsibilities are, type of activities you have for your participants, it's not a meaningful approval. So the approval should be by somebody who has direct knowledge of what your responsibilities and activities are. The next component that I had in bold on the policy was account coding. Proper account coding ensures that transactions are properly classified in the financial records for financial statement reporting, for example, office supplies, transportation. Account coding is important because this is how the finance department classifies expenses in the financial statements. So, for example, if somebody is looking at your financial statements and want to know how much the organization spent on office supplies, if everybody who incurred those expenses uniformly codes them to that same code, that number on the financial statement will be a meaningful number. So do you often have questions about how an expense should be coded? So for example, if you have a business meeting and during that meeting you had a business meal, do you code the cost of the meal to meals and entertainment, or do you code the cost of the meal to meetings and conferences? There's no right or wrong answer to that question. Each organization must decide for themselves whether it's more important. For example, since the cost of food has increased significantly, is it more important for them to know how much the organization is spending on meals, in which case they will direct you to code it to meals and entertainment? Or is it more important for them to know how much the organization is spending on meetings in general, in which case they will tell you to code all those expenses to meetings and conferences? So a useful tool that I developed and I recommend to facilitate the coding, which I recommend that your finance department distributes, is a chart of account expense guide. I have a sample on the next slide for commonly used expenses and the accounts they should be coded to. Again, if your organization uses an automated expense management system, this type of a guide should be embedded in the software. But if you don't have that, your finance department can simply prepare the guide on an Excel spreadsheet, which is how this chart of accounts expense guide was prepared. The guide has the account number, and this is the account number that the finance department uses to classify expenses, a description of the account, and the commonly used expenses that these accounts are used for. So for example, account 63110 for office expense. If you incur expenses, if you purchase forms for your office supplies, shredding expenses, moving expenses, equipment under a certain threshold, these should all be coded to the office expense category. And if you don't have such guidance such as this, I recommend that you contact your finance department to ask if they can give you some sort of guidance when it comes to coding. And the last component that I had in bold on the policy was due dates. Adherence to due dates for submission established by the Finance Department ensures that the department has received and reviewed all transactions for the month so they can generate timely and accurate financial reports. And due dates are important because, for example, if the Finance Department only receives half the credit card charges for the month and they process them and record them in the financial records, when the users of the financial statements are looking at how much specific expenses the organization incurred for the month, it won't be a meaningful number because the Finance Department only received half the credit card charges for the month and process them in the financial records. So does the Finance Department frequently inform you that you're late in submitting your credit card charges for the month? I know this is a challenge that many nonprofit organizations incur, and I alluded to it at the beginning of the presentation where we talked about conflicts where a case manager might be dealing with a client in crisis or other internal deadline, and the Finance Department has established a due date, which is tomorrow, which you cannot meet. I have some suggestions to comply with this policy requirement. At the beginning of each year, the Finance Department should distribute a schedule of due dates for each month with an email reminder being sent out to all staff several days before the due date. So this enables the staff to plan their schedule for each month so they're not up against a deadline. So for example, if you're a program manager and you're responsible for reviewing and approving invoices for your program, and you get these invoices electronically and they're piling up in your inbox, or you receive them in paper form and you have a pile of invoices on your desk, and tomorrow is the due date, and you can't meet that due date, having a schedule in advance of when these due dates are for each month of the year helps you plan your schedule so you can spread it out over the course of the month. Also, invoices, check requisitions, employee expense reimbursements, and credit card charges should be sent to the accounts payable department throughout the month. Don't wait until the due date unless there are circumstances that delay the submission. And this goes hand in hand with being able to plan your schedule, submit those expenses. Maybe it's at the end of each day or possibly at the end of each week, submitting them to your Finance Department. You should work with your Finance Department on a mutually agreed upon schedule for you to submit these expenses. This is a sample of the procedures to be followed for the sample policy that we just spoke about. These are the procedures for employee expense reimbursements, employees requesting reimbursement for business expenses paid with personal funds must complete an employee expense reimbursement form. And I have a sample on the next slide. The completed form with proper account coding, along with all supporting documentation, must be signed by the employee and sent to their supervisor for review and approval. Once the request has been approved, it's forwarded to the accounts payable department for review and payment by the due date established by the Finance Department. Payments are made each week on Wednesdays. Completed requests must be received by Monday at 4 p.m. to be included in that week's check run. And again, here in the procedures, I've indicated in bold those same components that are in the policy because the procedures are meant to give you the steps you need to follow to ensure that the policy is consistently carried out. Okay, so this is a sample employee expense reimbursement form. If your organization uses an automated expense management system, this information should be embedded in the software. If not, your Finance Department can prepare it on an Excel spreadsheet, which is how this was prepared. This information on this form is the date of the expense, the business purpose of the expense, if it's for mileage, where you went from and to, if you incurred toll expense, parking expense, car fare such as Metro cards, meal expense, all that information gets recorded on this form, which gets signed signed by the person, signed and dated by the person completing this form, as well as signed and dated by the person approving the form, and supporting documentation is included with the form for submission to the Finance Department. There are new Part 599 regulations from the Office of Mental Health for off-site services and fee-for-service staff. And now I'll just ask Fern if she can give us some more insight into developing policies regarding these regulations.
Yes, thank you, Roberta. I'm just going to spend a minute on this. What we are trying to share with you is how important transparency is and how that leads to buy-in. So there are a lot of fiscal operations and policies and procedures that oftentimes staff really don't understand, and all they know is that they have to submit something by a certain date. So creating the context and providing the information becomes extremely important to have that buy-in and support and less pushback, and meeting those deadlines and requirements that Roberta has been talking about and she'll continue to talk about. But I just want to talk for a moment about the changes in the 599 regulations, and particularly as they apply to the areas that we've been identifying. It's in many agencies, staff are hired, full-time staff, and then they are hired as a fee for service for additional services to go out to the homes. And now, because of the 599 regs, we've been doing this with children's services where staff could go on out to the homes and have a higher rate of reimbursement. That now applies to adult services as well. So the question becomes, how do you pay people for their travel reimbursement from one site to another? If they are, it's important to know that for the federal rules require that you pay between points of service within the service that you're providing, not for getting to that service or getting home or wherever you're going after that. As long as you're working within the program, the federal rules apply. For fee-for-service staff, supervision and training policies have to really be honed. How much time is spent in providing supervision? How do you incorporate people into the fee-for-service people into the culture of the agency? And in doing that, how are you teaching them about the policies and procedures and the expectations? And how are you monitoring all of that? The issues came up with with telehealth. OMH has now changed a little bit. It's not quite as flexible as the telehealth policies were under COVID. So you need to be very familiar with what's allowable under telehealth and what is not allowable under telehealth. And if you're using fee-for-service staff, you have to be clear about your supervision, your training, how you're managing crises, and paying for additional time that staff are using to address a crisis. I know different agencies have different policies and different approaches to dealing with this. And many agencies will pay for the additional time and some agencies will not. You have to be clear about what you're going to be doing and how you're going to be doing that. And you have to make sure that your staff documents their time effectively on a timesheet, so that we know how, particularly those fee-for-service staff, how they're spending their time, that the time is spent providing the services that they're supposed to provide. An example, in an agency that I was consulting with, they allowed, for a period of time, they allowed their staff to provide services for 45 minutes, but bill for an hour to allow for documentation time. Other agencies do not allow that. You can only bill for your face, you can only claim reimbursement for your face-to-face time with the clients, and it assumes that any documentation is either built into that, so they're teaching collaborative documentation. they're really leaving that up to the staff and not building in extra time for the documentation. That's a policy that has to be developed and shared clearly with the staff. Will staff be trained for, will staff be paid for training, fee for service staff? Full-time staff, no, they're there. They're trained for whatever you offer to them, but fee for service staff are not. So these are the sorts of things that you need to consider under the new 599 regs. And be sure that all policies must be documented and updated. In one agency that I dealt with, the policy had been to build in that extra 15 minutes. They changed the policy, new staff came on, they never wrote that down, and the old staff didn't know that the policies had been changed and kept claiming an hour's worth of time for a 45-minute session. So those are just examples. Roberta, back to you.
I'm actually going to jump in if that's okay, because we got a question from one of our participants. So, and this might be a Roberta question, but Fern, don't go too far because we might need you on. So the question is, if your company has several programs and some are grant funded, what is the advantage or disadvantage of account coding by expense category versus coding to the program?
Well, it really
That's Roberta.
Yeah, it really depends on the requirements of the grant, how you need to report on the spending of the funds that you receive for the grant. So there really is no, it depends on individual grant and individual organization. What's the structure of your financial structure? So you really, there's just like not like one way that's best for all grants.
Thanks, Roberta. And so far, that's the only question we got. So
Okay.
Please feel free to go right ahead.
Okay. Thank you, Fern, for that. We're now going to take a look at a second sample, cash disbursements policy and procedures. Cash disbursements is a rather large category, so there are many policies related to it. This policy states that the positions authorized to sign checks are the Chief Executive Officer, Chief Financial Officer, and Board President. Only one signature is required for checks issued for less than $5,000. Checks issued for $5,000 or more must be signed by 2 authorized signers. Procedures state the Chief Financial Officer will maintain an updated list of all authorized bank signatories. This is important because individuals might have left the organization or joined the organization and they are bank signers, so it's important to keep an updated list. All checks will be signed digitally with the authorized signature set up in the accounting system. The accounts payable coordinator will separate checks issued for $5,000 or more and present them to a second authorized signer along with all supporting documentation. And requiring 2 signatures on checks issued in excess of the designated threshold prevents one individual from having sole authority over organizational spending. This threshold might be lower for smaller organizations and higher for larger organizations. But one point I'd like to make is I think as a result of the pandemic, many, if not all organizations are using digital signatures on their checks. So just printing a check and having them digitally signed and sent to a vendor is not a meaningful signature. Those who have their signatures on the check, whether it's a digital signature or a manual signature, should be presented with the supporting documentation as well for them to review to make sure that, and we discussed this, that the amount being paid is correct and that it has a valid business purpose. I have some implications of policies and procedures for leadership. To be effective, leadership must support the policies and procedures and set a tone at the top for the importance of adhering to them. For example, credit card charges for all staff, even those at the highest level, must be reviewed and approved by a supervisor or other designated approver. So if your CEO has an organization's credit cards, those charges must be reviewed as well, should be reviewed as well. It's normally done by somebody on the board. It could be the board president, the board treasurer, or other designated internal individual. Adherence to policies and procedures supports timely and accurate financial reporting that's used by leadership for decision-making and for the development of strategic plans. Many organizations are working on their strategic plans. They're looking at their programs that should be eliminated, programs that should be expanded. And for these decisions, leadership is looking at the financial data and financial statements. So it is important that policies and procedures be adhered to so that these financial statements can be relied upon by leadership for making these important decisions. Policies and procedures provide the board of directors with confidence in the financial management of the organization as they fulfill their fiduciary responsibility for oversight of the organization's financial health. Your board of directors is not responsible for overseeing the day-to-day activity of your finance department, but they are responsible for overseeing the financial health of your organization, and senior leadership works hand in hand with the board of directors. So by presenting the board of directors with your policies and procedures in documented form, discussing how you enforce these policies and procedures, gives your board confidence in the effective financial management of your organization. And the last implication that I have here, and this is really an implication not only for leadership, but for everybody in the organization, policies and procedures help to preserve the reputation of the organization by implementing checks and balances that mitigate the risk of fraudulent activity. Your organization's reputation is one of the most, if not the most important asset that they have, and you never want to do anything to jeopardize that reputation. So adhering to policies and procedures that have proper checks and balances help to maintain the reputation of your organization. And I just wanted to emphasize also that transparency and communication from leadership increases buy-in and decreases resistance to change, whether it's applied to policies and procedures or to other areas, which Fern will be discussing in the next workshop that we present.
I'd also like to add here, Roberta,
Yes.
that all of these policies and procedures are not only important internally for operations, for transparency, for communication, all the things that we're trying to emphasize, but it's also important for the funders, the regulators, and if you're applying for grants, you know, for others who are looking at the strength of your organization as well as the sustainability, having these policies and procedures not only in place, but followed. You know, you can write up the policies and procedures, but if you don't have the documentation that shows that these policies and the related procedures are actually followed, then it's empty. So you have to be able to audit what you're doing and check to make sure that that's happening. Funders look at that. People who provide grants look at that operation, and that's important as well.
Thank you. I have here several tips for enforcing and monitoring policies and procedures. Policies and procedures should be documented in an accounting policies and procedures manual. I have a sample table of contents on the next slide and distributed to all staff to whom the policies and procedures apply. So if you prepare a policies and procedures manual and just put it on a shelf and never look at it, it's not a useful document. Senior leadership, managers, and supervisors should discuss the policies and procedures and the importance of adhering to them when they meet with their staff and at training workshops. For example, you might want to set up in advance a training workshop with mandatory attendance to discuss policies and procedures and the importance of adhering to them, with a sign-in sheet for attendees if it's an in-person training, or downloading a participant list for virtual trainings to ensure that everybody attends these workshops. And these workshops not only discuss these policies and procedures, but it also gives the participants a venue for asking questions about the policies and procedures, discussing challenges they might have adhering to them, and also discussing some solutions for addressing these challenges. Another tip that I have is a course of action should be established by senior management as to how to deal with staff who consistently do not comply with the policies and procedures. For example, credit card holders who do not submit their credit card charges timely for 3 consecutive months will have their credit card privileges revoked. Having an organization's credit card is a privilege, and with that privilege goes responsibilities. And submitting credit card charges on time is important so the finance department can close their books and produce a reliable and accurate financial statements. Each organization should decide for themselves what, if any, course of action they want to take to ensure that the policies and procedures are adhered to. This is a sample table of contents for an accounting policies and procedures manual. These sections are pretty standard for all manuals. Larger organizations might have more sections. I won't go through all of them. I would just like to highlight a few. Section 4 is cash disbursements, which we've discussed in this workshop. Section 5, cash receipts. Section 7, month-end and year-end procedures. Section 11, internal controls. Section 13, budgeting, Section 14, computer system access and backup, and Section 20, grants and contracts. In this section, you might want to talk about your policies and procedures regarding what documents are required to be maintained for your grants and contracts, what's the timing of your billing, what is your billing based on, and how do you monitor the status and the spending of the money you receive under these grants and contracts. I would just like to make a few additional points. There's no one-size-fits-all accounting policies and procedures manual. The manual will vary based on the size of the organization, the complexity of its financial operations, and its personnel. When you create a policies and procedures manual, you should be sure that the policies and procedures are relevant and practical for your organization, and that you have the resources such as personnel to implement them. So just taking the policies and procedures from another organization's manual and incorporating it into your own, but that's not relevant to the way your organization operates, you will not be able to enforce those policies and procedures. Departments outside the finance department, such as your IT department, or if you don't have a full department, an IT manager or your compliance department, should be consulted before creating the policies and procedures in which they have a role. Again, finance should not create this accounting policies and procedures manual by themselves. For example, the section on computer access and backup, your IT department or manager should have a role in determining what those policies and procedures are. And finally, the manual should be updated for changes at least annually, reviewed by designated senior management, and approved by the Audit or Finance Committee, if you have those separate committees, prior to approval by the Board of Directors. So somebody in the finance department cannot arbitrarily change the policies and procedures. There must be a formal process in place. The changes must be submitted to senior management for their approval, and then submitted to an Audit or Finance Committee to approve, and then submitted to the Board of Directors for their final approval. Again, this should be reviewed annually. If you have reviewed your manual and there are no changes for the year, my recommendation is, and best practices is, you should have notation in your financial records that you've reviewed your policies and procedures manual and that there are no changes for the current year. Okay, so now we're going to go into our breakout sessions for about 15 minutes.
Roberta, just before we go into the breakout sessions, I was looking at that question that was in the chat as you were speaking, the question about if your company has several programs and some are grant funded, and what's the advantage, disadvantage of account coding by expense category versus coding for the program. And I gave a little bit more thought to it. And in my experience as a CEO, most grants want you to have that account coding by expense. They want that line by line breakdown. So what Roberta had showed you in her forms before said the name of the program. You can do the same thing with the name of the grant, and then still have the expenses that are there. So it's not versus, it's both. you still need to know how how the grant monies are being spent. And are they being spent the way that they were intended to and agreed upon by the funder or by the grantor? So I just wanted to flesh that question out a little bit more.
Yeah, you should always have your account code, your program, and your financial records. The way you present it to these funders might vary, but yes, you do need to maintain your records with that specific information. Okay, so we're ready for our breakout sessions. Be for about 15 minutes. You should appoint a leader in each of your breakout sessions to take notes of what you discuss in the sessions. The discussion should focus on two policies that I think most, if not all, organizations have or should have: an organization credit card policy and an employee expense reimbursement policy, for example, for staff transportation, cell phone reimbursement, internet service, and discuss what problems did you face in complying with the policies, how it was rolled out, how it was explained, how it was enforced, and what problems did leadership face in implementing and enforcing the policies. And then discuss what recommendations you have for successfully implementing and enforcing the policies. And then we will just turn to the last slide. Is after the breakout sessions, we'll regroup for the full group, come back together, and the breakout sessions will be proposing questions they have for the group, discuss issues they've identified in the breakout sessions, and lessons learned that they can want to share with the group so that we can benefit from each other's experiences.
Thanks, Roberta. This is Meg again. I'm just going to jump in quickly, and I'm going to go back to the last slide just so everyone can see the breakout session. So I'm about to, so unfortunately, despite all of the technological savviness of Zoom, we have not found a way to embed this slide within each of the individual breakout rooms. So what I just did is I took a screenshot, and I believe I just sent it. It should be in everyone's chat box right now. It's a screenshot of exactly what appears on the breakout room screen right now, what we'd like you to discuss. What we're hoping you can do.
It's there.
It's still there. Okay, if you could, I would recommend you download that so that when you go into your breakout room, you could pull that file up or that screenshot up and just see the questions that we're going to ask you to go through. So with that, I'm going to ask Nadej to put us into our breakout rooms. Roberta, Fern, and I will be popping by just to see how things are going. So don't be alarmed if you see one of us pop into your room. And do feel free to ask us questions. I think we are going to do, just Fern and Roberta, I'm looking at the numbers, and I think we're probably going to do 10 rooms. We have a lower number, so I think 10 would be perfect. It'll give us a nice small group size. So with that, we will see you in your breakout rooms. And I believe, Roberta, we will be coming back at 12:05. Is that the plan?
Yes, 12:05.
Okay, all right. So see everyone back in the big group at 12:05.
All right, so let's just start discussing, and I'll ask for somebody wants to volunteer to start off, a group leader from one of the breakout sessions, any questions that they have for the group, issues that they discussed in the breakout session, or lessons learned that you've discussed. Would anybody from one of the breakout groups like to jump in first?
Looks like we have Barbara Pierce.
Hi there. Yeah, I'm Barb Pierce-Moore. I'm the president and CEO of Family Counseling Service of the Finger Lakes. And in part of the conversation that we had in our breakout was, we're having, our agency is experiencing like huge turnover in our finance department, which is creating crazy challenges and adhering to policy, process, and we have grown, added an additional layer. So even getting supervisors on board with process when you don't have the capacity, when you lose that number of folks. So we have, engaged external, consultant to come in and help support. And we're currently at the place where we're thinking, is it more beneficial to just hire consultants to manage our fiscal operations, what does that do to organizational culture? Is it some kind of a hybrid? And so one of the individuals had done that historically. Their organization had, and though successful initially, when they get acquired by another organization, you lose that support, right? It's almost like you're having to start over. So we're just curious if you had any thoughts or like feedback around
Yeah.
that.
Yeah, so that's the big question. Should we outsource part of our finance department, our whole finance department? There are pros and cons to both. You know, as you alluded to, if you outsource everything, you lose the control. You don't have the one-on-one access to everybody that you would if you had an in-house finance department. But one of the things that struck me when you first discussed your problem with a lot of turnover and the work, it's changing and you can't implement policies and procedures. What I found is a good starting point for you might be, and I do this for a lot of organizations, is to really get a very good understanding of how your finance department currently operates, what each person in the finance department does, how they perform their day-to-day functions. And you do that, and I go in and I would interview and document and make recommendations. So first of all, you know, having everything documented is important so that you know how your finance department operates. In case there's another disruption in you know, like a pandemic. But also you can look there at other inefficiencies. Are there things that are being done that could be streamlined? Is it duplication of effort? Are we using paper when we should be implementing technology? So just first, you know, getting a handle on what your finance department currently looks like, what they're doing, and then seeing if there can be, you know, changes to, even though you have a rotating staff, but there could be changes made to make your department work more efficiently. And I found that, you know, when I do this, a lot of, you know, managers are surprised, like, really? Two people are doing the same job? Or really, you know, this is really a waste of time, and they don't realize it. So there are, you know, time saving where staff's time can be used more efficiently. You can outsource a part of your finance department. So if you want to outsource just your payables, you might want to do that. There again, there's no right or wrong answer for each organization, but you know, I will recommend that if you do decide to outsource, you find an outsourced consulting a company that services your, you know, basic, you know, type of mission you have, the way you operate, the size of clients they have, what's their budget size. Because if these people operate with mostly clients with tremendous budgets and you have a smaller budget, you might not get the attention that you would with another consultant. So, you know, and of course, look at their pricing and how that fits into what you're currently spending. So there are factors to decide on both. So like I said, there's really no right or wrong answer, but I think that, you know, starting with what you have and maybe what you can work with, and then you decide, well, this is what I have, this is doable, this is what we're going to do, this is how we're going to reconfigure roles and responsibilities, and then we can take the accounts payable and outsource that. Did that answer your question?
Yes, thank you. And that is it. It's looking at the efficiencies. How do we become more efficient, effective? And so the hard thing is when you're paying the amount of money we are for an outside consultant,
Yeah.
you're getting one vantage point. And so you can't really bring a few different folks in to take a look and share what they can do and in what capacity they can help support. I think that's the biggest challenge with finance and the cost.
Yeah, no, it is very costly when you bring these consultants in, and, you know, hiring different consultants to do different functions. I mean, I think that's certainly challenging, and I'm not even sure how that all works, because really what finance does, one piece affects the other piece. So it's really a department as a whole. So if you have one set of consultants doing one thing and another set of consultants doing something else, who's overseeing the whole operation? I mean, you don't want to end up, after you pay all these consultants, that you have to spend most of your time managing the consultants, because then it becomes really inefficient. So yeah, and, you know, and consultants often will tell you a certain fee, and then when they come in and they look at exactly what you do, they say, oh, this is an add-on, there's additional costs for this or for that, until they really understand how you operate.
I'll just chime in here. It reminds me, there's a Chinese saying that When there's a crisis, it's both danger and opportunity. So what you're describing, Barbara, sounds like a real crisis or a potential crisis, a crisis in development. This is really the opportunity for making changes, for restructuring, for stepping back, looking at, how has your department been structured? Is it the best way to have structured? Why is there so much? I'm sure you've asked yourself these questions. Why is there so much turnover? Is there a different way of assigning responsibilities within the department and all the things that Roberta has been talking about? But I think it's important to be able to step back, to take, I know the pressure to get things done and making sure that everything's in place, but it's also important to step back and to look at where you are, how you've gotten to where you are, and where it is that you want to go before you start paying lots of other people to do all of that piecemeal kind of work. And I'm on board with Roberta that doing what you can not to chop it up, because the communication is so important, coordination, the oversight becomes so important, whether it's outsourced, done in-house, some sort of combination. But there has to be someone who has that whole picture and holds it all together. And finally, whether it's outsourced or in-house, you still have to have all of these policies and procedures. They still have to be followed, and you still have to have an auditing function internally to make sure that all that you say you're going to do, or the consultants are doing, all of this is actually being done. So I hope that was helpful.
Does anybody else have any questions that came up in their groups? Just jump in here. You can unmute yourself. I believe you can raise your hand. Just let's discuss. Nobody?
Or maybe we can go from group to group, I think, Roberta.
Room one? Who is the leader in group one? Anything? I don't want to put people on the spot, but I just wanted, maybe one area that might have been touched upon is the use of technology. Has that something that's been discussed on how you've been using technology in your organization? Has that helped in adherence to policies and procedures? Do you find challenges in terms of the training or how you used it? That's an option, something that I know a lot of organizations are struggling with, but I'll let somebody in room one, you want to talk about something item that you've addressed, questions. Room two.
I can talk for my group. I'm not sure what room I was in, but I was with Tina and I think someone else. But we were talking about people submitting their receipts on time, and we were talking about making sure that, or re-educating some of the staff, because what I was telling Tina is that sometimes I think we forget that some people have a bad relationship with money, depending on their upbringing and stuff. And sometimes we have to repair the relationship and understanding with money in order to manage it better. And, re-educating them on how to, understand why it's important to put it by a deadline and put a time frame. Also, sometimes I tell my staff, you need to have this done by Friday at 2 p.m. Right, so it's clear and cut, and there's no discussion behind it. But then also saying that if these receipts are not in by that date, then we can't take them anymore, right? Because I think it held people to a different standard and helps them with accountability too. But also we talked about also meeting with them monthly versus just having the conversations through them. And she was also talking about some of the things of also having the staff understand why they can't just always borrow money from other line items and only focus on their budget, in particular in the line items that they do have. So we were really talking about re-educating the people that we function with and help them understand this is their budget and this is the money that they only have. And although in the past you were allowed to do something else, right now that's no longer a thing. So that was a really good conversation to have too, because I think sometimes we do things, I think as a staff too, as a team, that's all right, you know what, you can buy from this line item from the other budget, but then it becomes habitual to the point that people think that we could just cross money all the time. I hope that makes sense, what I'm trying to say.
Yeah, No, that makes perfect sense. And I'll just jump in here and say that there's also should be collaboration and coordination with the finance department. You
Mhm.
should meet with them and discuss, you know, your grants, your contracts, your spending. And, you know, they could be a valuable tool to help you not to actually do the spending, but to monitor it. You know, there could be reports or there could be, you know, explanations that you can go over with them. So, you know, in organizations I've worked for, you know, program met with finance on a monthly basis just to discuss budget spending, and, you know, going forward to the, you know, what's in the future for till the end of the fiscal year. So again, you know, you should use your finance department, program and finance working collaboratively. Is there anything else anybody wants to ask? Anything, any lessons that they've learned, things that were helpful?
I'll talk about our group. Our group was a group 9. And what we talked about was some of the policies around the credit cards, about how handling receipts, incorporating that into the policies of the requirement of, and when people lose receipts, having to write a memo, trying to reach out to the vendor and so forth, so that there is a trackable record of those things. And then just consistently always needing more training, because people come and go, and having a consistent training for the use of, the reporting of, the guidelines, the approvals, and then consistent communication, because cards are lost, people leave, and they might have credit cards, and just keeping someone that's constantly tracking those things. A couple other things we talked about, just problems with the frequent flyers, those that consistently lose receipts, to build that into corrective action plans, into compliance, and then just those kind of things, just training, consistency, metrics, identifying those who struggle and getting them additional training and so forth.
Yeah, if you don't mind, I'll just jump in here with a couple of recommendations.
Okay.
Regarding the training. So what I've done at several organizations when I was a finance director was in the finance department, I prepared with one of my staff, we prepared a video, our own video on training how to use the software. So this was on a particular expense management system, and we actually set up, I was the reviewer, he was the submitter, and we actually created our own video on step-by-step how to use the software. And we had, and it was, everybody was required to watch the video, and if new people came, they were given the video to watch. Of course, you could ask questions outside of that, but it was at least a baseline for how to use our how to use the system, because oftentimes the software vendor gives you instructions, and it's not really relevant to your particular system. So we created our own video, and videos are now very easy to do. So that might be something that your finance department might want to look into. The other thing I want to talk about, you said, you lost, people lose their cards or they leave. First of all, it is very important, I know this is very challenging in finance, for us to know when staff leave the organization. So for example, if they have a credit card, that credit card needs to be canceled immediately upon their leaving the organization. And oftentimes in finance, you might not know that the person's left and the credit card is not been canceled immediately. So there has to be some sort of connection and communication between HR and finance to make sure that those credit cards are canceled immediately. Also, there should be an administrator for the credit card program, one person designated to oversee the process, who gets the credit cards, how much the credit limit is, replacing lost cards. There should be one administrator, and I've been administrators for several programs, and it's a big job, but it's important to manage that program correctly. And the other thing is, in terms of staff leaving, I talked about supervisory approval. This has been a challenge. It's like somebody leaves the organization and they're approving a program manager's expenses, but that person left, and finance never knew they left, because we never got notification from the HR department that that person left, and we need to assign another approver. So regarding the credit cards, it's important to have a credit card policy documented with an administrator and step by step how the users should, the responsibilities they have with the credit cards. I hope that was helpful. So did anybody in your group have any recommendations? Anybody in the group have any ways that they address the challenges that you have, or it's just people basically have challenges that haven't been resolved? Oh, I think you're muted.
Are you talking to me?
Yes, yes.
I think we talked really about, you know, how we handled that, or, you know, how do we handle that? And that's through better communication. So we were kind of not saying that. I think we've all experienced those problems at one point or another. And I think we're just talking about, you know, ways that we conquered those things. And that was through, you know, better training, better communications, tracking things better, having better policies that indicated what the next step is or the steps in that process. And, you know, the big thing that came up a lot was the training, like, because, and not just training at once, like, because people come and go all year round. And but having that reoccurring trainings, you know, whether it's every year or when new people come on, you know, issuing them trainings then. So, and just having that policy out there so that, you know, people, when there's new people that come on, that you might not remember what was written on there a year ago, and just kind of going back over that as a refresher to both yourself and any new people. So
Yeah.
I'd like to add another level when we're talking about training. Staff know that there are going to be requirements of them. They have to put in timesheets. They have to put, you know, the cash reimbursements for whatever their expenditures are. You know, there's a ton of documentation in addition to the documentation that they have to do around the direct services to clients. And often the first thing that goes when they do that are these kinds of complying with the fiscal department and operation requirements. And I have found in training that it's not only important to tell people, to show people, and to explain to those folks how to do things and what's in place and what the expectations are, but it's also the why. Why is it important to comply? And not only how does it affect the fiscal department when you comply, or affect the leadership, but how does it affect them directly? Why it needs to make sense to the staff who are being asked to do all of this. When they begin to understand the flow of dollars to their own budgets, and I'm a big proponent of sharing budgets with staff, with program managers, staff, so they understand what it is that they're doing and what the effort is producing. Because if they're not submitting documentation in a timely manner, that's going to affect the cash flow of the entire agency, and that's going to affect their program. And so now when they're looking for some monies or some support or whatever it might be, that's not available. Or the grantors, they may not be able to provide information. The agency can't provide information to the grantors in a timely fashion, can't show that they've met the deliverables. And now that's going to affect the program too. Being transparent in these ways and really having staff understand why complying in various areas, particularly in these operation and fiscal areas, are so important to them and the services they're providing to their clients. That increases buy-in and certainly increases the compliance with the expectations.
Yeah, that's why it's important. Even, you know, if it's just at staff meetings, every time you have a meeting with staff, the beginning of the meeting, you discuss, maybe you take one area of the procedures and say, you know, this we're having an issue this month with, you know, people getting things rejected from finance. What is the issue? Just putting it out front and working with staff, like, maybe the first time they don't get it, but the second time they will, and then they will comply. So understanding and having it be meaningful, I found that it's a process, but when they get it, everybody really does want to adhere. Anybody else want to, I think we're at the bottom of the hour. Does anybody else have any questions for the group? Anything, final lessons, lessons learned that they've discussed at the group? Any issues as we wrap up?
Or any points that you discussed in your groups that haven't already been mentioned that you'd like to share with the rest of us? Okay, so in that case, maybe we go on to the conclusion and just talk a moment about what's coming up next. Is there an additional slide here? I think there is.
Yeah, well, I'll pull up the slide. Okay.
So I mentioned earlier that we invite you to check out the previous series on fiscal operations and the interrelationship with program operations. We referred to that in a number of ways today. That was the foundation for some of what we talked about today. And today we took a deeper dive, and we will be taking an even deeper dive in 2 weeks on the 21st and looking at these issues from the leadership perspective and some of what I touched on in my comments a little bit earlier. So please, if you have the time, it's there, it was recorded. And I think there are many gems that would be of interest and importance to all of you. Okay, so that was before. And do we have one more slide for you?
No.
Okay, well, there's the contact us, but I do encourage you to join us for our next presentation. Again, I want to emphasize that our focus here is on breaking the silos within organizations. There are so many organizations that still feel that the administrative operations issues belong with administration and the fiscal office, and let the program staff do what the program staff needs to do and just comply with requirements. In my experience, that doesn't work. So it's finding the right ways to communicate, again, to be transparent, to get that buy-in, and to make sure that the organization is functioning together. I like to use the phrase that the whole is greater than the sum of its parts. If you don't have each department, each component of an organization working well together and communicating together, they each hold up one another. And so looking at how to strengthen those relationships, those communications, becomes essential to successful operation. And we'll be looking at that even more closely as we're talking about building a business plan, doing trend forecasting, and then looking very specifically at how you translate that into operations and staff practices, not only agency practices, but staff practices. And we'll be focusing on that in 2 weeks.
Yes, and I hope in this workshop, people gain a better understanding of what accounting policies and procedures does, what finance do, why they do it, and it gives you a little more in-depth understanding to know why finance has certain requirements and what their responsibilities are. So yes, this collaboration is important, and when it works well, it really benefits the organization in their ability to carry out their mission. So thank you for joining us. And we look forward to the next workshop.
And feel free to contact us. You have our contact
Yes.
information here. Both of those are available. And if you'd like to contact us, email,
Phone.
text us, whatever.
Thank you so much, Fern and Roberta. We appreciate it. And we look forward to seeing you again in 2 weeks. Take good
Thank
care,
you.
everyone.
Thanks, everyone.
Thank you.
Bye-bye.